Hello everyone, my name is Ketan Mittal and today we are going to talk about the Reliance Industries Q1 results, which is from April to June of the financial year 2021-2022. So let's start. We are first going to talk about the year-on-year comparison, which means we are first going to look at the Q1 results of the current year and then we'll look at the Q1 results of the previous year. If you look at the revenue has grown by 57% on a year-on-year basis from 1 lakh crores to 1,58,862 crores. The expenses has also grown by 50% on a year-on-year basis from 87,000 crores to close to 1,30,000 crores. The net profit shows a 4.2% improvement from 13,248 crores last year to 13,806 crores this year. Now, because Reliance is such a huge conglomerate and it consists of so many businesses, these results do not give us a complete picture. So what we'll do is we'll look at the revenue segregation of each of the businesses that Reliance Industries does. So let's move to that. If you look at the channel-wise revenue, Reliance currently operates four major businesses. One is oil to chemical, the other is Reliance Retail, then comes Reliance Digital Services, which is Jio, and then there is others. Others would include things like oil to gas or financial services and things like that. So oil to chemical business, which accounts for 58% of their total revenue, has grown by a massive 75% on a year-on-year basis. Reliance Retail, which contributes to 22% of the overall revenue, has grown by 22%. Reliance Digital Services, which is Jio, contributes to 13% of the overall revenue, and it has shown a 10% improvement from 21,000 crores to close to 23,500 crores this year. If you look at others contributes only 8% of the revenue, but the year-on-year growth has been 44%. Now let me take you back to the previous slide. The revenue has grown by 57%. And if you look at this particular table, you'll realize that a majority of that is coming from the oil to chemical businesses because the growth has been 75% and the revenue mix is also very healthy at 58%, which means that if Reliance is earning 100 rupees in the form of revenue, 58 rupees are coming from the oil to chemical business, and that business has shown a 75% improvement year on year. Now let us take a look at the snapshot of each of these businesses to understand how each of these have been doing on a year-on-year basis. We'll first look at the oil to chemical business, where the revenue has gone up by 75%, sales mix is 57%. The management expects that as the economy improves and demand comes back, the demand for transport fuel is going to go up, which will drive their revenues further. On a quarter-on-quarter basis, the revenue is up by 2%. The throughput is higher by 1.6%. The good thing is that they have been operating at near full capacity, which is why the revenue through this business is at a 10-quarter high. And that's why you see that the revenue is up by 75% on an year-on-year basis. The only concern that the management has posed is that if there is a fresh lockdown, the recovery in this business can take a hit, and that's what they're most concerned about. Overall, the metrics look good for this current business. Moving to the Reliance Retail business, it is important to understand that only 26% of the stores were fully open. The footfall was only at 46% of the pre-COVID levels. The sales mix is 22% and 123 new store launches have been launched. Reliance Digital revenue up by 1.8 times. Now, even though only 26% stores were open and the footfall was less than 50% of pre-COVID levels, they still showed a 22% improvement on a year-on-year basis. Now, again, as the demand comes back to normal, as the economy improves, Reliance Retail will show a lot of improvement from the current numbers. And I'm extremely bullish on this current business. The consumer demand is reviving. They are also expected to complete the Just Dial acquisition, and their priority is that digital commerce should be scaled up. Coming to a business that everyone is well versed with nowadays, and that's Reliance Jio. Reliance Jio has shown outstanding numbers this year. With 14.3 million new subscribers added this quarter, the monthly churn has dipped to 0.95%. When I say churn, it means that if 100 customers are coming and acquiring Jio, out of that, how many customers are switching to another platform? So that's only 0.95%. The average data used per customer for Jio is also up by 18% to 15.6 GB. And it's very evident given that the data usage has increased for everyone. Given the tariff packs, this was bound to go up. The average revenue per user, which we call ARPU, which is one of the most important metric in the telecom sector, stands at 138 rupees. The footfall is at 46% of the pre-COVID levels. It is important to note that they have opened more than 100 stores this current quarter. The total customer base now stands at 44 CR. Now, India has a population base of close to 130 CR. Now, if you think that Jio has 44 CR out of those 130 crores, that translates to a total market share of 35%. And that's very healthy for Jio. They have also enabled Jio Recharge via WhatsApp. This is further expected to increase the liking of Jio customers because everyone uses WhatsApp nowadays. Okay, so now we'll look at what is the future outlook as per the management. The demand revival is expected to increase the revenues in the long term. They have already shown a record EBITDA when the demand in the economy was low. So the impact due to the second wave of COVID was relatively less. It is expected that Jio is going to continue its market leadership. And the reason they say that is because new offerings in the form of Jio Phone or in the form of Jio Fiber are coming up for the customers. Healthy average revenue per user is likely to be maintained, and that's because the overall telecom market is consolidating. I strongly believe that Jio and Airtel are going to be the only two players that will be left in the market because Vodafone, Idea, or any other telecom player are reporting a very strong churn rate. People are not sticking to the network, which is why I believe that only Jio and Airtel will be the dominant players in the market in the times to come. Reliance Retail is positioned for a strong recovery, and that is because store additions and the revival in consumer sentiment is largely expected. Their focus is on digital transformation and driving customer-centric innovations. So overall, the picture looks good. Oil to chemical has shown a massive improvement on a year-on-year basis. The Reliance Digital and the Reliance Retail, every business has shown a strong revenue growth and strong profit growth. And I strongly believe that this is likely to continue given that the demand in the economy is going to be picking up. Now, coming to the target price of Reliance Share, the current market price is 2,105 rupees as on 25th July. However, I strongly think that the target price will reach 2,389, closer to 2,400 levels by the end of this year. This is a potential upside of 13.5% in a span of 5 months. I strongly believe that given the current financials and the current position of Reliance Industries, this target is very likely to be achieved. All right, thank you everyone. Thanks for watching the video, and for more of such quality content, please subscribe the channel. Thank you.